Hi, it's Ryan from the Mandan Fund. I'm going to be explaining the story of Steinhoff. It's been in the news recently for the past week and a half, I believe. And of course, as you can see, due to the monthly chart, it shows the share price deteriorating, bouncing a slight bit, of course, of its, I believe it must be all-time lows. It seems to be, yeah. And company's now worth a fraction of what it was back just before the month of December had begun. And now, first of all, there are many things that are happening, but before we explain what's going on, we've got to realize that Steinhoff is a retail holding company, as it says here. They're dual listed, and they also, one would be able to recognize them as they are the owner of Poundland, which is a firm that has most of its branches in the United Kingdom. And this merger could be believed to have been one of the many dodgy business deals on behalf of the company that have accrued great debt on the balance sheet, and to the point that the company can potentially breach covenants. And now covenants is just another fancy word of saying debt. And when you pay back debts, you have to make sure you don't breach your covenants. If you accrue so much debt to a point that you cannot pay it off, you're in a scenario where you breach covenants. And there are many companies to name that have breached covenants or warned on breaching covenants. There was the Lonmin 1p infamous rights issue, and if we check it for the sake of it here, Lonmin went all the way from like 1800 GBX a share, maybe even more than that, in fact, yeah, way higher than that, much greater levels. But of course, all I remember is this point. But of course, they had a fundraising. It was a horrible rights issue for shareholders, but I believe it was at 1p per share. Literally, that's crazy, considering a lot of people were paying what? In 2013, £35. Not even that, sorry, 350 something pounds. It's crazy. Absolute madness. And of course, that rights issue kept them alive, and now they're about to breach covenants again. So, this kind of stuff is not what you'd like to see in a company, especially when looking to invest. Another one, Carillion, definitely in breach of covenants. What do they have? About $1.5 billion in loss, I believe, just for the second half of 2016, or the first half, one of them. But their most recent results show that their debt has tripled, and the valuation is now a measly £71 million. As you can understand, this whole idea of breaching covenants, being unable to pay off debt, is one of the main reasons as to why Steinhoff's shares have fallen. And of course, Steinhoff has lost about $12 billion of market value. And they're the owners of course, the Poundland discount stores and the Conforama furniture stores. Of course, that's a bit less well known. But they were definitely hitting their all-time lows. Many people also believe that those buying right now could potentially be short sellers, of course, because, when a short seller buys back shares, they're merely closing their short positions, and of course that results in a share squeeze. Of course, the generic response would be it was only delayed results, and we haven't really seen results. We've only seen an attempt for short sellers to drop. I apologize for my ill health, but short sellers to drive the price as low as they could, and those long go bottom fishing. In this case, you'd see people looking 0.36. You'd think, oh, maybe this is a technical Fibonacci bottom at, funnily enough, 88.88%. And they buy, they make a quick trade. In fact, that was about 70% for a quick trade. People could do that. Of course, the spreads would have been varied, so say 60%. But a large company like this diving, generally you see these kind of bounces. I mean, Another example would be Provident Financial. When their CEO Peter Crook left, and there was a huge FCA investigation, meaning Financial Conduct Authority investigation, into Vanquis Bank, which is basically a credit card agency of which they run, and also their home credit lending business, which was once supposedly an infallible business, and of course nothing is too big to fall. Enron states in the past, but also Steinhoff has their investment grade ratings lowered. So all these credit rating agencies, such as Standard and Poor's, etc., in the US and anywhere else, they end up saying if this is into a good credit rating, investment grade rating, and they cut it, I think, to a B1 from Baa3. You don't really need to know too much about what that is, but definitely know that they cut the rating. And also they've been under investigation by the state prosecutor in Germany. I believe, of course, that's where their main headquarters should be. No, their operations, and they have a listing in Germany, of course. So, they've been under that investigation for accounting irregularities, and also, I think a few of their managers at Steinhoff are suspected of basically overstating revenues at smaller subsidiaries, which means, we'll give an example, Tesco's. When Tesco had this big accounting scandal so many months ago, there was a huge press story saying that they had overstated their profits. In this case, when a company overstates revenues, and of course they must be profitable to be benefiting off overstating revenues, otherwise you wouldn't overstate revenues in a fraud scandal. Just looking at it from a fraudster's perspective, of course, but one could never know what their true intentions were. But what they do is they put these irregularities there, they strengthen their balance sheets, and therefore that makes their liquidity stronger. And liquidity is basically the amount of positive net assets, we'd say. So if the company increases their liquidity by talking about a lot of fake assets that they have, so we'd say we've got 100 million profit from, I don't know, company A, they can say 105 million, and they could do it across several subsidiaries to the point that this becomes a large figure and none can notice, except for themselves, of course, because they're the ones doing the accounts. And Steinhoff, of course, as a large company, would do so, denied any relation to wrongdoing, and they also denied any wrongdoing in these German allegations. But it hasn't released its, I think, annual audits, and of course that's been delayed. So of course, as you get in normal scenarios such as this, you get those bottom feeding traders, and of course if you're a trader, this is scalp heaven, of course. Literally, you get a little bounce here and you're out, little bounce here and you're out, you know. It's almost like an algorithmic pattern. But of course this isn't an accurate chart to show that kind of movement. But it's crazy because it's such a large company, and of course I'm not going to use the argument too big to fall because that's rubbish. At the end of the day, Enron fell. Carelion's on the brink of going bust, and they have what, 60,000 UK staff. And also, the main impact this has on larger banks is Steinhoff is such a large company that these large companies are held by institutional investors. And institutional investors such as Investec, for one, and I believe Deutsche may hold some, have great exposure to Steinhoff. And the fact that Steinhoff has fallen near 90% of its value, anywhere from 80 to 90% of its value, when these institutional investors held them, they're going to lose a lot of money. And in fact, Investec has warned it's got great exposure. So maybe there's a domino effect coming. Who knows? But of course, it's not too big of a story for us, isn't it? Because of course it's not UK listed. But they do own Poundland. Who knows? 90 pence, 20 pounds? No, of course not. But hey, that was a quick roundup. Best of luck anyways.